Hey everyone, welcome back to Corporate Dakota. Ready to dive into some corporate tea leaves? Today we're cracking open Third Harmonic Bio's latest 10K filing. You know, the kind of report that makes you think, is this a science paper or a financial statement? Turns out it's a bit of both, but we'll sort it all out with a smile. The company's rethinking strategy after recent trial results. Will this shake-up lead to success, or will Third Harmonic Bio need a whole new Harmony? Let's find out. This is their annual report, a Form 10K with the SEC, covering the fiscal year that ended December 31, 2024. Basically, it's a yearly checkup of the company's health required by law. First off, let's note that the aggregate market value of the common stock held by non-affiliates of the company was about $2098.5 million based on a share price of $13 back in June of 2024. That's a pretty decent chunk of change. Now, before we get lost in the numbers, there is a proxy statement that will be filed later and provides insight to some of the details. We will focus on what we have now and keep an eye out for that later. Of course, no corporate story is complete without a risk factors summary. It's like the company's way of saying, hey, things could go wrong. They highlight a few biggies. So what exactly does Third Harmonic Bio do? Well, they're a biopharmaceutical company focusing on inflammatory diseases affecting skin, lungs, and the gut. Their lead drug is THB335, an oral Ki inhibitor which aims to be the master regulator of mast cell function. Think of mast cells as tiny alarm systems in your body, and Third Harmonic wants to control them. Here is the gist. The company plans to initiate a 12-week placebo-controlled phase 2 study in CSU, what the company calls a strategic review process to maximize shareholder value. They also just reduced their workforce by approximately 50% to cut costs. Let's talk trial results. The phase 1 clinical trial in healthy volunteers showed that THB335 has a half-life of around 40 hours, which means it can be taken once a day. The trial also showed dose-dependent reductions in serum tryptase, a biomarker of mast cell activation. This is a good sign, suggesting the drug is doing what it's supposed to do. Now for the yellow flag. There were a few subjects with isolated transient asymptomatic transaminase elevations, which involves liver enzymes. Although experts didn't think it was drug-related, it's definitely something to keep an eye on. Other observed adverse events were hair color change and reductions in hemoglobin and neutrophil counts. These, they note, are pretty much aligned to the known effects of KIT inhibition. The good news, if successful, this approach may potentially treat many mast cell-mediated diseases. Third Harmonic Bio has a vital agreement with Novartis for its key technologies. Under this agreement, the company made a one-time payment of $0 to $4 million to Novartis and agreed to issue shares of preferred stock and are obligated to pay Novartis $7 million up to an aggregate of $31.7 million up to an aggregate of $31.7 million upon the achievement of certain specified development milestones. For the license is very crucial to the business. Of course, it's not all sunshine and roses. The company faces a ton of competition from big pharma and biotech companies, academic institutions, and more. They're all fighting for a piece of the same pie. The company calls out names of the competition, including Celldex's CDX0159 and Blueprint Medicine's BLU808. The company protects its inventions. As of the end of 2024, their patent portfolio included 8 patent families. Time for the risk factors. This section always reads like a horror novel for investors. One of the big risks the company faces is what to do in case of adverse developments affecting the financial services industry. The company holds a lot of its assets at third-party financial institutions, and the events involving liquidity may in the future lead to market-wide liquidity problems. The company admits to a material weakness in its internal control over financial reporting in the past. Basically, this is a fancy way of saying they had some problems with how they kept track of their finances, but the company believes the steps they have taken were able to remediate their weakness. There's also the risk of adverse events in clinical trials. If their clinical trials reveal significant adverse events, then it will inhibit regulatory approval. No bueno. A significant risk is not being able to obtain, maintain, and enforce patent protection. That could leave the door open for competitors to steal their ideas. There is also the impact of the Inflation Reduction Act, which eliminated the coverage gap under Medicare Part D beginning in 2025. As of December 31, 2024, the company had 53 employees. A key consideration for the health of their business would be to retain those employees. Alright, let's dig into the numbers with management's discussion and analysis of financial condition and results of operations. Time to put on our accountant hats. In a nutshell, they've been losing money and expect to continue losing money as they keep investing in THB35. Here's a vital claim. With their cash, they say they are funded through at least 2026. Research and development expenses account for a significant portion of the company's operating expenses. It increased by $12.5 million from 2023 to 2024. That is quite a jump. This increase was due to advancing THB 335 and also some employee-related expenses. Total other income net increased slightly. They are mostly holding in money market funds, so that is pretty standard. The Novartis agreement requires, if development is successful, $31.7 million in milestone payments and $200 million upon the achievement of certain sales, and commercializations comes with big financial consequences. Finally, it's worth noting the operating lease liabilities, coming in at $1.12 million in the next 3 years. Here they note that the company has a director of IT, infrastructure and cybersecurity, as well as a cybersecurity insurance to help mitigate risks. Finally, the company shares their net loss per share of common stock, basic and diluted. It went from 0.78 cents to $1.09, not a great sign. As of December 31, 2024, there was $28.7 million of unrecognized stock-based compensation expense. So, although they had a loss, not all things are losses. Future value exists due to their stock options. So what's the story here? Third Harmonic Bio is at a crossroads. The company is cutting course and really is focusing on THB 335. In some ways this makes them stronger, it also makes them more at risk. Their balance sheet appears stable for now, but what happens with THB 335 will make or break the company. They're putting all their eggs in one basket, which is both risky and potentially rewarding. A lot hinges on the success of THB 335. This drug needs to ace its clinical trials and win regulatory approval and also get acceptance. It's a high stakes game. That's the Corporate Decoder take. If you found this breakdown helpful, don't forget to like, subscribe and drop a comment below. Until next time.